And welcome out to Tackle Trading's halftime report, a daily live stock market analysis show where Coach Matt, Coach Tim, myself, I was about to, I guess, reference myself in the third person there, Matt. Am I breaking the fourth wall? I don't know what I'm doing, but here we are live. Matt, how you doing this morning?
Tim, doing really good. I had a great holiday weekend. I really enjoyed my Labor Day and getting back, after a long extended holiday weekend sometimes can be difficult, but I'm ready to rock and roll.
Yeah, I enjoyed my Labor Day as well. We took the kids to the arcade there. That was pretty fun. We kind of kept it under 2 hours, which I think is a miracle, quite frankly, taking three young girls over to the arcade where there's games and all kinds of things to get in and out and food and laser tag in 2 hours. I was pretty impressed.
We were very efficient.
I was also impressed with your laser tag skills, Matt.
Yeah. Yeah.
You cleaned up. I mean, you were the high. First of all, our team cleared the board. We destroyed the other team of parents and kids on both sides. It was great. But you were the high point scorer, Matt.
Yeah, I was. You kept asking, "Hey, who's player three? Who's player three?" And I'm just sitting there going, "Yep, that's me." I raised my gun, I cocked it. That was me.
Did you have a strategy or did you just camp?
Well, I went in there like, I don't know, Tim, if you've seen that old comedy, How I Met Your Mother, but I went in there like Barney, and I was going to dominate. I had a game plan that we were going to go at the upper base, me and Kat, my 9-year-old daughter. Kat was going to be make sure that I was protected at all times. And she had my left flank, and your daughter, Sammy, had my right flank. And, I popped a rapid fire on the gun, and I drilled that base probably about 600 times. And, we ended up setting a high score for the month at the laser tag. So I'm very proud of the team and how they committed to winning, and very excited that we were able to pull out the W.
When they created Labor Day in the 19th century, Matt, I don't know if they had laser tag in their sights or as to why they created the holiday, but I enjoyed it quite a bit.
Lessons.
It did bring up the question.
It's always important to teach lessons as an educator, and I just wanted to teach them.
You had to teach them. You had to teach them. All right. I mean, here's the question for everybody out there. Do you ever let your kids win at something? Now, we were on our kids' team. Do you ever take it easy on somebody and let them win? Matt, we had a discussion about this a couple times this week.
Yeah.
What's your perspective?
My perspective is that competition is a very important thing in life, in society. And when you let people win, I don't think they grow up with that type of mindset, that go get it, just do it type mentality. I think you got to teach them that life can be difficult at times. And, one of the biggest things one of my pet peeves is that we have to give everybody a participation trophy, and we have to give everybody a blue ribbon, and we have to make everybody feel good about themselves, and we have to make everybody feel like everybody is equal and all this jazz. And that's simply not life. And so, no, I don't prescribe to the philosophy that you allow people to win games to make them feel warm and fuzzy and so on and so forth.
No, I don't either. I believe in competition. I believe in keeping score. I'm okay with participation trophies.
But at what age? I mean, at 2 years old, you're not going to dominate your daughter, right? So at what age do you stop allowing them to win a little bit? To me, it's young, right? But I get it. You're not going to go in there in the basketball like you were talking about earlier. You're out there shooting hoops with your 6-year-old. You're not going to go swat him into the cheap seats, right? So there is a line, obviously.
I think that you've got to create enough competition and reinforcement that it's okay to lose, that you're okay to beat your kids at games. I got no problem with it.
It is okay to lose. I mean, it is okay to take an L, right? I mean, Tim, every successful person in life, in the history of mankind, has losses.
Sure.
It's okay to lose. Not like my daughter, she's as competitive as it gets, right? And she wants to win. So, Tim, when we go mini golfing, I try my best. I do. but I set a line, right? And we have a little bet, and I give her 1/2 stroke per hole. She's only 9, but she's been in golf lessons for a few years now. She's got a really good stroke. She's a good putter. So I give her a 1/2 stroke per hole, and we play straight up. She knows what the 1/2 stroke means. We play straight up, and you know what, Tim? She beat me 9-4 last time. And you know what? She has not stopped mouthing off to me and talking trash and smack. And you know what I'm going to do next time? And I even told her this. I'm bringing my A game. I am bringing my psychological A game, and we're going to do this the right way. But we set a line, and I explained to her what it is, and we move off that.
I like it. There will be a day, by the way, where she consistently beats you at golf.
That day's not long.
I do believe that. Because she's
not.
Starting young. She's actually getting lessons and getting training on it, and actually learning to do it the right way. Mm-hmm.
She's got a smooth stroke. She can hit. She's 9 years old. She can hit the ball probably off the tee. I'd say 75 yards right now. Not consistently, but we're working on things. And but at the same time, I think you got to teach your children that life isn't easy, and that you're going to have ups and downs, and sometimes you're going to have losses, and not everybody gets a blue ribbon, and not everybody gets the first place trophy. I mean, life is competition. You have to embrace that.
Sounds like a 60s folk song. I like it. Let's get down to business here today. Let's go through the market. Let's start working on, kind of giving people some information about what's going on. Obviously, the market down here this morning, Matt. Not exactly a crazy sell-off, I would say. The S&P 500 has a red candle, 0.47% down. Whenever I'm down about 0.5% on the market, Matt, I kind of think, okay, red day, red candle, but another day at the office. If I don't get a 1.5% move or more, I'm not going to get worked up, quite frankly.
Well, no, we're not going to get worked up over a pullback when the market is overextended, Tim. We talked about it last week. Expect the market to slow down, maybe form a high base type situation. The market looks like it wants to form a bullish retracement, and you know what? That gives you a tremendous amount of opportunity on the sell side in certain sectors that are setting up for bearish opportunities. Energy, in my opinion, is setting up for good bearish opportunities. We talked about that on Friday. Basic materials setting up for good bearish opportunities. You have other sectors that are setting up for bullish opportunities. So simply because the market is rotating a slight to the downside, forming a bullish retracement, doesn't mean let's get out there and panic. Obviously, we want to be calculated. We want to be cool in our approach to the marketplace. I'm seeing this as an opportunity to enter into some bearish positions. If you haven't already, I entered into quite a few bearish positions on Friday in energy and basic materials. So, for me, I want the market to pull back down into its moving averages. I want the market to pull back down into its breakout point. When those types of things happen and we get a little bit of a pullback down into these types of levels, that's where you get these really good buying opportunities. Tim, your great buying opportunities isn't when the market is overextended from a short-term perspective. Your biggest opportunities from a buy-side, perspective is when the market is coming down into support, that your relative strength indicator comes down into a better buy-side mechanic type technical setup. That to me is a really positive thing. I love it when the market pulls back into support, Tim. That's an excellent buying opportunity.
I'm with you 100%. I love markets like this because they're stock pickers markets. I don't just trade one direction. I'm not just a long-term bull and buy, stocks and invest and want the market to always go up. I play up and down and sideways and volatility and all kinds of stuff. I love markets like this, creating opportunity on this pullback.
This is a trending market. Listen, if you're a trader and you can't get behind a trending market, right? Higher highs, higher lows, higher highs, higher lows. It doesn't get easier in a market than when it is a standard trending market. So this is just a trending market. You approach the trend, you approach the pattern. The market's overextended. I'm expecting a little bit of a pullback. You might not get it all the way down to the lows. This is a trader's market, and I'm loving it.
It's definitely an uptrend. The pattern is now developing as a bullish retracement. Not quite there yet, Matt. 2 out of 3 candles red, but actually 3 candles lower here day over day over day with a lower.
It's got to come back down another 20 points to be a retracement.
Yeah, give me a levels read on this, Matt. Where do you have support? Where do you
I
have
have some more.
resistance?
I have support smack dab right here at 2865. Again, everybody knows that's a zone, but that's where I have that support level is somewhere between 2860 and 2870. The market currently is at 2890. I would love another 20 points to the downside, slow its momentum. That's kind of where I'm looking at it to get back more aggressive from the buy side mechanics. Right now, Tim, I'm actually carrying a bearish delta coming into the week, primarily in basic materials and energy, but overall, I've had enough bearish positions to offset some of the bullish activity out there. So just from a short-term perspective, I do expect a little bit of a pullback, Tim. But from a resistance perspective, you're just looking at here at the all-time highs, 29.17. That's got to be a resistance number. 28.70 to 28.60 in this range, maybe even 28.50, Tim, somewhere into this range from this breakout here to this kind of breakout level
Sure.
there. You're talking somewhere between 28.50 and 28.70 could act as a very significant support level. It might not get there, Tim. You still might form that high base type situation. It's kind of just in the beginning of that type of pattern here. But like I said, this is really kind of a stock pickers market, and it's a beautiful trending market environment. The one thing that, unlike last week, we do have a fairly significant week this week in the market from an economics perspective. Australia announced interest rate policies earlier this morning. They're standing pat at 1.5%. That's amazing, Tim. The U.S. for years and years, if not decades, has had a lower interest rate than Australia, and now U.S. has a higher interest rate than Australia. But they stood pat. The emerging markets are getting beat up. There's a lot of bearish opportunity over there. You have bearish opportunity. We talked about this last week, Tim. I love this trade. Loved it last week. Don't necessarily love it again. But once that pound came into 130 and triggered underneath 130, that was an easy trade setup that we looked at last week. There's a tremendous amount of opportunity out there in the broader markets. You just have to go find them a little bit.
Yeah, for sure. The news last week was that we had struck a deal with Mexico in principle and terms, and that I was going to be moving forward, and that Canada was going to get on board by Friday, and there was positive momentum there. Over the weekend, President Trump obviously came out and did some tweeting, like he is.
Oh my God.
Have you heard that he likes
I
to
honestly
on
don't
Twitter?
know who needs to stop tweeting more, President Trump or Elon Musk.
That's a good question.
I honestly, it's a coin flip for me. Like if I was chief of staff, I would basically be like, take his Twitter account or I'm quitting. Right. If I am the COO of Tesla or the board of directors of Tesla, I'm like, take his cell phone away or we're kicking him out as CEO. It's utterly ridiculous. The attacks that he does on Twitter, coming out there and Tim, even though they didn't make a deal with Canada, and I don't know the Canadian individuals who's leading the negotiations, but he said they were close to a win-win solution in those negotiations. They just had to, continue to negotiate. They're going to continue to negotiate this week. So even though they didn't come to that hypothetical, arbitrary, draw it in the sand deadline on Friday at 5 p.m., they're still negotiating. I still expect a deal to be done. I don't see the market coming down today as a reflection of opinion based on that lack of deal on Friday, Tim. I just see this as an over reflection of the broader market being overextended.
Well, I mean, there was some pretty direct language from the president. There is no political necessity to keep Canada in the new NAFTA deal. And I'm just going to ask you a hypothetical because I know, Matt, and I've said this, you've said
I'm
this.
sure 38 states in the union disagree with that.
Do you believe, what would happen if Canada gets tossed out of NAFTA and we can't strike some kind of trade deal?
Okay, first of all, Trump, from a legality perspective, number one, Trump does have the legal ability to give 6 months notice on canceling that trade deal. However, even if Trump did that today, Tim, you will have massive lawsuits and legal battles and disputes regarding the validity of the president basically just doing that. I'm sure Congress will have something to say about that as well. I'm sure the states will have something to say about that as well. So, he's been threatening NAFTA ever since 2012 when he was starting his political type career. This is nothing we haven't heard of many times, especially on the campaign trail. To me, I don't see that happening. I think it's bluster. I think it's posturing. They're continuing their discussions this week as well. But Tim, we're just not going to stop trading with Canada. That's not going to happen.
And most diplomats and negotiators realize that Trump is the guy who's going to pound his chest and go out there on Twitter and say what he needs to say. I think Donald Trump's persona is pretty
I
clear.
honestly don't think the leaders of the world care what Donald Trump says on Twitter.
Well, I believe they probably do because he's kind of a wild card. He's a loose cannon. I know what you mean. They don't care about the substance of what he says, but they do concern. Wouldn't you be concerned?
Trump's Twitter account is meant to for one purpose and one purpose alone. It is to rile his base, and that is it.
At 3 a.m.
He is no, yeah, at 3 a.m., at 4 a.m., at 6 a.m., on the pod, at dinner, it doesn't matter. His Twitter account is a specific purpose to rile his base. It has no other political purpose than that.
The top negotiator for Canada did come out and say that they believe that, and I think her name is Chrystia Freeland.
Yeah.
We're not there yet, but a win-win agreement is within reach. I believe it's probably noise until further.
If this was something the market was concerned about, it would be down much more than it is today.
Yeah, but then that's the way the market goes, right? I mean, you get the headline news, and if you're a trader, you're going to read the headline news. You're going to turn on CNBC. You're going to turn on the Tackle Trading halftime report, and that's what they're talking about, right? But even you and I, Matt, we don't think it's a big deal. We're looking at the economics. The discussions you and I had today were about the 10-year, 2-year, inverted yield curve potentially happening, and interest rate policy and real fundamentals. This other stuff is noise.
It's a headline, for talking heads out there like you and I now, Tim. But it's a headline for talking heads to talk about, to discuss, and to debate, and to disagree, and to drive clickbait, and to drive, ratings. And it's an easy thing for CNN to talk about. It's an easy thing for Fox News to talk about. It's an easy thing for MSNBC to talk about. But you know what? I'm much more concerned about this week, Tim. I'm much more concerned about manufacturing data coming out on Thursday. Oil inventories, because I'm a trader in oil, and I'm much more concerned about the unemployment rate coming out on Friday.
Well, and everybody out there, halftime crew, by the way, welcome out to our halftime crew. I want you guys to have halftime. I love it. I love it. Hashtag halftime crew. I want you guys to always have the attitude with the first day of the week. I know it's Tuesday, Matt, but bank holiday. It's our first trading day. My schedule operates around market hours. So
it does. It does. There's no doubt about that. They're like, what time does your work day start? 7 o'clock.
Yeah.
Why? Well, the market opens up at 7:30. That's why.
Yeah.
What time's your day get done? Well, 2. That's what time my day gets done. But no, if you're a trader, you live around the economic calendar. You live around, you don't live around standard monthly calendars and universal time frames. That you're always around when the market's around.
Let's give some context to what's going on in the indexes, and let's go through each one of them, Matt. The ES is always the first one we look at, biggest, broadest, most balanced index. YM is also on a pullback, red candle. What's the percentage sell off there?
Yeah, your percentage sell-off is 0.4%. You're down 100 points. It's really kind of nothing. You're coming back down into the high base type situation at 25,700, Tim. So that's your first support level. Secondary support level, I put it down in the 25,500 range. Either one of those levels anywhere between that level can act as a pretty strong support level. A good pullback in industrials, I would be a buyer there, Tim, and I have not been a buyer for a while in industrials. I've had it ranked as the fourth index for a while now, but I could see myself picking up some industrials off a fairly decent pullback.
I agree with that. I actually like this sector potentially this week if we get a pullback into that old resistance point. One of the things about the sector I found interesting, Matt, on Friday, we were going through the scouting report picks with the team. And one of the only reasons why industrials have really lagged in the Dow is because of certain key components like GM, GE, and specifically Boeing had been down pretty healthy. So there are a lot of companies in this sector that are still very bullish.
No, the overall sector is doing good. The overall index is doing good. I have it lagging for a reason. It's just underperformed the rest of the indexes year to date. But this trend that really has been developing, in my opinion, over the course of the last 2 months, from this point, not over here, but really just from that point there, it's not as consistent of a trend as, say, the S&P, the Nasdaq.
Sure.
The Russell 2000, but it's still a fairly consistent bullish uptrend. You got some random volatility there that you're not seeing in some of the other indexes, but overall it's starting to form a pretty consistent trend. A pullback down into those support levels that I talked about would be a buying opportunity.
I like the industrials potentially later in the week. Obviously, on a red candle, you don't have confirmation today. It's more of a setup. Move on to the NASDAQ or the Russell, either one in either order. The Russell, big red candle, actually percentage wise, and this is common, Matt. When the market's down, small caps are going to move further. When the market's up, they're going to move further. So on a red day, it's down 1%. Good, healthy pullback. Actually, I kind of like this because
Oh, are you kidding me? Our entire team loves this,
oh,
they are celebrating today. They're like, "Oh, I don't have to worry about my September bear call side of the condor. That is fantastic." No, I talked about it last week, Tim, when you were talking about, do you manage that condor, that September or that October condor with the breakout on the rut? And I said no. I said absolutely not. You got plenty of range up there. The market's overextended. It's slowing down. I don't expect the market to go up another 10% without some degree of pullback here. And you know what? You got it on RTY. I don't think this is not a trend changer. It's still a bullish uptrend. It's coming back down into some very important support levels that I want you guys to track over this week with the Russell, though. You got a major support level between 1700 and 1720 here. And the reason it's such a wide range on the Russell index here, a 20-point range on your support level, is two things. Number one, the Russell moves $18 a day, Tim. From the high to the low, it has an $18 ATR. When you have an $18 ATR, typically your area of a support zone is going to be around 1 ATR, right? Mm-hmm. So when you guys hear me say, oh, support's at 1720. No, it's a zone around 1720, and that zone is typically right around 1 ATR. So that 1700 to 1720 support level does seem a little big, but it's still, I mean, keep it in perspective. We're not looking at, Ford stock here. We're looking at an entire index that's 1720. So 20 points on an index really isn't that big of a number. So where I'm looking at this support level, and I'll kind of draw it for you, just so that you can kind of get an indication of how big that support level can be. You're looking all the way here from 1720 down here to 1700. That's how big that support zone is, Tim. And so the market can come all the way down anywhere into this range, and we're still in a bullish trend, Tim. Just because the market comes down doesn't change the trend. Trends take days, if not weeks, to change, right? So looking at this, looking at it coming down into support, it already kissed off it from an intraday perspective. There still is selling momentum here, obviously, but I'm looking at this as a positive for the bear call side of the iron condor. I'm looking at this as a positive for people that missed out on this run in the small and the mid caps, which was a very good run in for the past couple weeks, for them to potentially get into the second run.
Now, if you are part of Halftime Crew and you know what we do at Tackle Trading, just type in cash flow because you know how important that is. The Rut Iron Condor system is a cash flow system, Matt, and it's a premium system at Tackle Trading. I love it. The thing about it is I'm with you. I love the analysis. It's very, very helpful. Old resistance points around that 1700 mark. And really, my favorite part of this chart you have right now is how thick that box is, Matt. Yeah. Because support and resistance are zones. They are not decimal points, especially on a 2000 stock index. I mean, you gotta be common sense with some of this stuff and really think about what
everything from a charting perspective, Tim. I know we get specific in, retracements versus extensions versus, resistance and support. And we talk a lot about numbers and, you ask, well, Matt, where's resistance? And I said I think on the S&P 500, I said, previous high, which was 29.17. So I gave it a number at 29.17. Mm-hmm. But once again, Tim, you got to realize the ATR on this bad boy is also 21 points. That zone around that level is somewhere into this type of range, Tim. And so basically, when you give that thing a number, because you have to give it a number to work off everything, right? So if I'm looking at a potential breakout of 29.17, I got to give it a number so I can set up my system the way I want to do it. You can't just say, well, around there, you want to buy around there. No, those are the zones that could act as support or resistance. So the zone that can act as support or resistance here is somewhere into like that range there. So in terms of it, it's always a zone. Even though we give it a finite number, nothing is finite when it comes to trading. Rules are finite, position size is finite, risk rules are finite. But when it comes to charting and technical analysis, everything is in a round. It's a range. It's a zone. There's no finite nature to it.
Let's take a look, lastly, but not leastly, at the NASDAQ and actually talk a little bit about technology. If there are anything in the market that's been, as hot as anything else, it's been tech. We've been talking about it. Amazon, Apple. We'll talk about those stocks here in just a moment. The NQ is kind of same pattern, though. It's same basic relationship. We're at a high point. It's got to pull back into some old resistance.
It's a high base. It ran. It's cooling off. There's not a lot of economic news today. You get ISM manufacturing tomorrow. Wednesday, not a lot of economic news. Thursday starts the unemployment, the employment numbers, ADP, non-farm roll, those types of things. Friday comes the unemployment rate. So really kind of nothing economically today, but just kind of a wait and see a little bit. I'm not taking the sell-off today as anything. It's not. I don't even want to say it's a sell-off. You're down less than 1% in almost every index.
Well, and here's an opportunity to teach our audience something here, Matt. One mistake I've seen new traders make over the years is when the markets are all red, every index we just looked at is red, 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 red. They'll then say their market posture is -1. And actually, our market posture is more over time. I'm still bullish on the market because the market has a bullish trend. But I'm cautious with this week's action in the market, and I'll go try to find bearish trades, right?
I have not changed my market posture since February, Tim.
Well, I went to a neutral there for a long time, but I've been positive one price since April. Yeah, once we corrected.
I've been positive one since about end of February. I very rarely change my market posture unless something radically changes momentum in the market economically or whatnot. In fact, Tim, I've been much more willing to carry a +2 delta than a neutral delta. The only time I've carried a negative delta is literally today, and that's just because I went fairly heavy, short on energy and basic materials.
Yeah, I'm with you.
But that's only going to last a few days.
One headline that we could make in the market right now, Matt, is that fear in the market rose 10% day over day. Go take a look at the volatility index.
Don't need to. I don't need to. Here, let me save you some time. Market's down, VIX is up. We're good.
Okay. All right. Very fair enough. I'm not going to fight you on it. Let's move on to crude oil.
Hold on. Let's have you more in depth than
button. That. I need a button. Remember, a table button. I'm pushing this over.
Hey, do you need more analysis than what I just gave you? Market's down, VIX is up.
No. Okay. On a day like this, it doesn't tell you anything. On 90% of the days, it's not important. I agree with you. I'm just tabling this. We're moving on.
I think you just admitted I was right, by the way.
No, because the 10% of the days it is important. It is important. Yep. Crude oil is next. Let's move on to CL. Now, this is an interesting chart, in my opinion, Matt. I've been calling the 70 mark as a significant trigger zone for some time. And it did go above 70 with some force here this morning. You saw a huge rally overnight and into today, but then it has been selling all day long. Do me a deep dive and really dig into that candlestick right there.
That is an extremely bearish candle, mind you.
Yeah.
I mean, it to me, you've been calling 70. I've been calling 70. I think the difference was you were much more willing to be, I don't want to say aggressive because that's not you, but you were much more willing to do something above 70. Would you agree?
Yeah, I'm not long yet, but I did see that as an opportunity. And I came into today knowing what the overnight action was because, we watch the futures market when we get up in the morning. And I was thinking I might go long oil here, and I've not done anything with it yet. And with the candle and the action through the morning, I just kind of left it on the side.
Well, you had some positive news come out of Africa today regarding oil. That's what's kind of sparked it a little bit. You had the hurricane, I believe Hurricane Gordon coming through the Gulf here this week. That sparked some concerns over, I want to say Anadarko evacuated a couple platforms. So basically had some bullish momentum, but that hurricane doesn't look as bad as some of the ones we dealt with last year. And I think once it started getting above that, you're so overextended coming into that breakout, Tim. It's not just me, the trader, who's saying that. Other traders around the world that trade oil, they look at this movement, they see what's happening, they see it slowing down, they see the initial kind of movement back up, and it's like, yeah, I get it, but I mean, what's your expectation? That's my question. What's your expectation here? If you're buying the breakout of 70, you're basically saying that this is going to run to 73, 74, $75. And think about that for a second. You're basically saying you're going to have a 100% repeat of what we saw here in June. And I just don't see that happening here without some type of pullback. And so I see this quite a bit on failed breakouts. And this is what this is right now. It doesn't mean it's going to come down, Tim. It just means that at this point, this is a failed breakout. We call it a fake out. And a lot of times you see these types of failures on breakouts is when they're already overextended coming into the breakout point. This puppy is already overextended. It's already moved from $64 all the way to $70. It's already moved literally over 9% in one run. And are you really going to make the argument that you have a high probable setup for it to run another 5-6% over the course of the next week and a half? It certainly can do it. There's no doubt. It did it in June, right? It certainly can do it. But I just don't think that's wise investing or trading protocol by saying that this is going to do something that historically it doesn't do. Crude historically doesn't move 15% in a month. Crude will go up, it'll come down. It will go up, it will come down. But I'm not going to be the trader that says it's going to do something that historically it just is not justifiable. To me, this is all based around probability. And the probability setup for me, what do you got at best case, Tim? At best case, 50-50 as it goes, that it goes up, right? Give it best case 50-50. Well, what's your potential reward to risk ratio at that point if you're buying above 70 and you're putting in a stop loss underneath 70 and you're targeting at best 73? And you just don't have a reward to risk ratio that justifies the lack of probability. I mean, Tim, if you have a 5-to-1 reward to risk ratio and I have a 40% probability, I'm still going to make that trade. But if I have a 50-50 probability and I'm going to make one versus lose one, I'm never going to make that trade, because even if you break even over time, you're losing based on commission. So to me, it's just not a very good trade setup. And I've said that many times on in the podcast and the halftime or short. I just don't like breakouts off overextended patterns. Looking at this from an intraday perspective, it was fascinating, Tim, to watch this. Most of this bullish price movement happened overnight when the U.S. equity markets were closed. So you had a lot of this bullish activity. Once that market opened up, literally right here, Tim, boom. Once the stock market opened up, it just got hammered. And so if you were waiting to buy this coming into the breakout at the opening of today, I mean, you just got it handed to you. But quite frankly, you probably deserve to get it handed to you, because you bought a breakout on overnight activity that had no volume associated to it, that was basically overextended going into the breakout in the first place. That is not a high probability setup for me. And you know what, Tim, I could be dead wrong on this, and crude could just drive right back up. It is bullish. It has a bullish mentality. But that's just not me. That is not a win-win situation for me long term.
Yeah. Listen, I get it. I mean, there are ways to play it. Same call I had 2 weeks ago where you could do a call ratio backspread would apply today. And by the way, I don't think 70 is going to be a magnet. I do believe bulls or bears will win. Somebody will win this fight. Crude oil is just too volatile. And so there could even be strategies that are more advanced, like an inverted fly or a debicon, that could logically makes sense here for me today. I'm with you. I have no confidence in the short-term chart.
As a trader, you can wrap any strategy around any chart and make the risk graph look good, right? I mean, come on, we know that. But from a directional perspective, there's no trade here. Would you agree with that?
Yeah, I agree. Short-term, day trade, swing trade, I got nothing. I've got bidirectional, I got volatility trading, and I am still bullish in a
Cash
position
flow and
where
volatility trading. That's the only way to approach crude this week, in my opinion.
That's where I'm seeing crude oil as well. Let's move on to gold, which has been my darling. Gold, I love you.
Gold, we love you.
I love you. I love you.
Gold bugs, we love you too.
And guess what? I love the breakdown here today, Matt. 1200 was a key level. I think this is a significant break. Other people are not reading it as significant as I am. 1199 seems to be holding right here. We're only down 0.67%, but I see gold as bearish. I've been bearish for a long time. It's been selling here 4 out of 5 days.
There is going to be a wonderful buying opportunity in gold in the future.
Yep.
there's going to be an amazing buying opportunity in the future. And it will most likely come in conjunction when we release personal goals in October or November of this year. But it's not today. This trend is still bearish. Momentum is still bearish. Dollar is still, especially today, dollar's bullish, right? Dollar's putting on the pain train again. So, we got it. We've been -2 on this one, -1, -2 on this one for a very long time, ever since it broke 1300. There's nothing I'm seeing in this chart in any capacity to get me off that bearish call. I'm bearish today, I'm bearish tomorrow, and I'm bearish until I see a reversal happen.
Yeah, me too. And so much of gold is going to be in conjunction with what's happening with the dollar. They have stayed inverted in many regards. Let's look at the dollar index next, dollar sign DXY. Currency markets are going to be in play this month, Matt. In fact, I think some of the better opportunities might be happening in things like currency, and commodities with the volatility. Stock markets on a pullback, we know where we can get opportunity there. Gotta love those green candles if you're a bull, but really, it's not a clear signal
Well,
yet,
I'm
is
not
it?
buying.
No.
I said last week, you can't buy this. I'm not buying this. This is if you're trading the currency, you're analyzing this to spot pick different currencies and commodities. And to me, it was overextended. It got too overextended to the upside, came back down, too overextended to the downside. I didn't feel there was a trade here. I love this trade setup here. Boom, boom, boom. Love this one, right? I don't like this one, right? Even though this one failed and this one worked, you win some, you lose some. But for me, being heavy negative on materials, energy, gold, those types of things, it's important. If you're heavy trading, commodities, you need to understand how the currency market impacts that, Tim. And you said there's going to be some interesting plays in the currency market this month, Tim. Well, that's probably because we got all the central banks reporting interest rates this month,
Yeah, it's
right?
going to be a heavy month for that.
Every single one of them are reporting interest rates this month, with the United States Central Bank, and I'll show you kind of the CME group's FOMC here. Tim, if you're looking at this from a September rate hike perspective, okay, and this is what you guys have to understand about economics reports, Fed monetary policy, Tim. We've already priced in our interest rate hike. Would you agree?
Well, I think we had priced it in many regards. Yes, the market does believe that we are going to raise interest rates in September. So have they priced that in? I don't know. The market keeps hitting an all-time high. But yeah,
Well,
we
hold
all
on.
know it's going to
We're
happen.
still talking two percentage points here. I mean,
Correct.
that's nothing.
Yep.
That is absolutely nothing when it comes to the market. A 0.25% interest rate does not impact the market that big of a deal. It happens over time. But when I say something's priced in, Tim, when the CME group is coming out with a 99.8% projection of a 0.25% rate hike, and the other 0.2, Tim, is a 0.5% rate hike, that is a 100% probability that there's going to be an interest rate hike, which means the entire market believes that this interest rate hike has already occurred. The only thing that would happen is if they did nothing or did something more than the 0.25%. So in looking at these, you've already kind of had that interest rate increase. It's going to be interesting to see how the other central banks respond to the U.S. Staying on course with their interest rate policy here, Tim. So I see there is tremendous opportunity in the currency and the commodities market this month. You do have one thing with the overall marketplace, Tim. You do have some degree of seasonality concerns, and I want you to talk about that, because when we're coming into the first trading day of the overall month, right? This is the first trading day of September. Okay. Talk about seasonality and why seasonality is important, and why, typically speaking, September and October have been two of the worst producing, months that the market has.
I love September. Football season. It's my birthday. It's my daughter's birthday. It's a wonderful time of year. I love it, but the market doesn't always love it. But the market loves it sometimes. Seasonally, Matt, it's just been very volatile. I want everybody to think about a couple of things. What drives the markets? Fundamentals, okay? And that's going to come from earnings. We're not in earnings season anymore. Almost every company in the S&P 500 reports in July or August. September is like the month off. Now, there are companies reporting, even this week, Broadcom and DocuSign, and there are some companies reporting.
Nobody
but in
would care.
general, we're out of earnings season. We're not in earnings season. Economic data slows down. So then you start focusing on international markets. You start focusing on interest rate policy. The Fed usually has a meeting in September. You start focusing on things that can drive opinions in radical ways. And so the market has volatility. September, some years is great and some years is an absolute dog, but it is a month that will take a direction one way or the other and be very mixed in that regard. Anticipating the fall, though, and September kind of sets up the fourth quarter of the year. Matt, there's a thing we call the Christmas rally, and markets know this, and traders know this, and investors know this. If you can get through September and October unscathed, and you can come out the other side, a lot of times the market can run for the entire fourth quarter. You know?
No, it usually does. Santa's kind to traders, no doubt about that. I mean, let's face it, we got to make some money to afford all those Christmas toys so we can afford all of our kids. But you know, September and October, you know, I know the seasonality concerns. I get that, but Tim, some of that is a little random. Would you agree with that? I mean,
yeah.
You take the last 20 years, two of the worst months we've had in the marketplace were happened in September of 2008 with Lehman Brothers, and September of 2001 when 9/11 happened. So, and again, you can't take out these types of things from seasonality, but if you do take those two things out, September, you're not talking about September as a negative month, Tim.
Well, no, I agree. Those are extremes, but I will say this. I do think statistically, you go back 50, 60, 70 years, there is enough data to let you believe it's not going to be every time. But
I agree with that. But that same philosophy, though, T, is that sell in May and go away.
Yeah.
Right? Because that's been a concern for 50, 60 years as well. But we've seen that in the information era, in the technological era, in the era of high frequency trading systems and all of this jazz, where you've really kind of removed a lot of the emotion from the equation from an investing and a trading perspective. You know, I don't see that as nearly as significant as, say, it was before the technological age kind of started booming. So you can't take out what happened, but I do see a lot of these traditional type of philosophy, sell in May and go away, oil and gold being inverted together with one another, the September, August, October craze. I see some of these traditional things that investors did. I see them as decoupling, and so I'm looking at this in September, and I'm certainly a little cautious overall because the market's overextended. But Tim, I'm not going to change my trading philosophy based on something that has occurred based on a probable perspective over 20 years, right? If the market's going to come back down into support, I'm going to buy that bounce the same way I would buy that bounce in July or August.
I agree. On any given year, I don't care about what the average of the last 100 years are. I'm going to trade what's in front of me, right?
You just want to keep it in the back of your mind, though, right?
That's right.
Yeah.
Yeah, you just need context is what seasonality is all about. There's no doubt.
Context, Tim. Financial utilities, on average over the last 20 years, two of the best performing sectors, technology, basic materials, two of the worst performing sectors from a seasonality perspective. XLU, looking at a potential bullish opportunity sitting at here at support. Keep an eye on that. XLF, same type of thing, setting at support, 20-day moving average. Financials actually up today. Utilities actually up today. So seasonality perspective, those two are the best performing sectors over the last 20 years. And those two are the only sectors that are actually up today. The two worst sectors out there from a September perspective is XLK, which is technology, and technology is overextended, selling off just a little bit today. I'm not concerned about technology, though I do expect a little bit of a pullback, but not concerned. But Tim, XLB, basic materials today, getting it on the chin, down 1% today, showing some bearish mentality. So, from a seasonality perspective, I mean, it's only one day in September, but it's kind of in line so far. I think Tim, hey, Cody, come on in here.
What's going on? We lost Tim.
Yeah, Tim's back. Tim, you back?
Oh, no, he just moved for a second.
Yeah, you just moved for a second. Cody, let's talk while Tim comes back on in here. Let's talk about a little bit about kind of stocks in the news. First and foremost, let's go ahead and look at the emerging markets, ladies and gentlemen. For those of you who halftime crew, how many of you are bearish on the emerging markets? This to me is still a continuation of the bearish downtrend. I'm still very bearish on the emerging markets. Although I am seeing a little bit of situations here where we might see some reversals. This is something to track this week. This is something I'm looking at this week. I am short on emerging markets right now. The concern I have, and I love the downward movement today, down 2% today. Absolutely love that. But you see this little support over here, Cody. I'm a little concerned about that. I'm looking at that $42 mark. If I start to see a little bit of slowing momentum at 42, this could be showing a little bit of a reversal pattern. And so one thing to keep in mind here as we talked about some of the seasonality concerns in the US indexes, watch it to see if we slow down in the US indexes, watch to see if we slow down on the bearish standpoint with the emerging markets. I'm still short on the emerging markets, but at the same time, I still, I'm a little cautious at that $42 mark on the emerging markets. I think we do have Tim back. Some more stocks in the news, and I want to get both of your take on this.
Short Comcast. Pull up Comcast. We're shorting Comcast.
You're
Everybody,
shorting
halftime crew, if you love me, short Comcast.
Okay.
I'm so tired of my Wi-Fi going out. Unbelievable.
Are you going to try to put up a social media protest, hashtag short Comcast? Is this kind of like, I want to see, I saw some videos of people literally ripping up their Nike socks yesterday. It's the dumbest stuff I've ever seen. So are you going to like break your Comcast thing? Because I think you should, because you went on mute again. Cody, come back in here. I want to get your take on a couple things. Number one, guys, a stock to look at. Put it on your list.
He does not stick around for long, does he?
No, he doesn't. Put it on your list is AMD. This is a stock that was on the Tackle 25 in 2017. We removed it to put Applied Materials on there. That was a big mistake on our part. AMD is absolutely on fire. It is the best performing stock in the S&P 500. You saw upgrades across the block in the chip manufacturers. Everybody expects AMD to take market share from the Intels of the world. Look at this stock. If you haven't been trading it, put it on a watch list. I love this stock. I've loved it for a very long time. I love it even more today. Love the upgrade on the high base breakout on AMD. Amazon hitting.
Hey, Matt, real quick before you leave AMD, we brought it up a couple times on the Coaches Lounge, and we actually did a comparison where we overlaid AMD with Intel. Mm-hmm. Those charts are almost inverted of one another. You see AMD just taking that.
Yeah, it's like what was an old wrestling thing? I don't know what it is, Cody. Cody, did you ever watch wrestling growing up?
Not too much. No.
Neither did I. But I did have like a phase where I watched it for like an hour 1 year. And old Triple H, and I think his name's Shawn Michael, maybe. Okay, they used to. That's inverted, right? That's inverted. So yes, AMD is showing tremendous movement. I love that as a chip manufacturer. Amazon hitting
now,
that.
Time out. If you're going to bring up wrestling, bring up WWE.
I don't know if you will actually be able to maintain your conversation.
I will.
Off twice. So let me finish my point. Amazon hitting $1 trillion mark. We talked about that last week. It's like that. It's like a target. It's like a magnet at that point. Tim, I had a conversation with Big Cat today about Amazon. He's actually looking to now add to his exposure to Amazon. I love this stock as well, but a stock, Verizon, VZ got downgraded today. Couldn't happen to a worse company. So Verizon got downgraded today. I don't know why you would have been buying Verizon anyways, but it got downgraded today. And the last stock in the news that I do want to talk about, guys, and I want to get your take on, and Cody, I want to bring you back into here as well, because I want to get your take, Cody, too. Nike came out, and Cody, if you can give me a link for the ad campaign so I can kind of show them real quick. Nike came out with an absolute massive announcement yesterday. They are putting out their 30-year Just Do It campaign. Mm-hmm. And, they have a whole bunch of different people in their marketing campaign, Serena Williams amongst other people. But one of the faces of the campaign is a controversial figure over the last couple of years, a quarterback of the NFL by the name of Colin Kaepernick. Colin Kaepernick was a quarterback for the San Francisco 49ers, took him to the Super Bowl a few years ago. A lot of people feel like he's been blackballed from the NFL for taking his stance. Now, I want to be very specific here. This is not, his stance is not an anti-American, anti-military stance. His stance has been widely criticized and widely supported. His stance is a protest for equal rights and equal protection under the law. And this is something that I do believe in. I do believe that we should have equal rights and equal protections. And I don't believe we're there yet from a societal perspective. I support peaceful protest. I support peaceful protest in every single capacity. I believe we fight to have people have a right. That doesn't mean I believe that the NFL and kneeling is the proper venue to do that, right? That's not what, but I do support somebody's right to protest. That is what I support. I loved the campaign. I did. I loved the campaign. I thought it was a beautiful campaign, but it's not going to be without controversy. Okay. And that's what I want to have a quick talk about. And then we'll talk about it from an investor's perspective, because Nike, one of the worst performing stocks in the S&P 500 today, down 2.6% on the news. I want to get Tim's take on it. And I also want to get Cody's take on it. Cody, let's start with you. First and foremost, the protest that has been widely covered from news media, President Trump, you name it. Okay. Cody, what's your take on this? You grew up an NFL fan. You grew up, loving sports and athletics and all that jazz. What's your take on it?
So I agree with you with the, everyone should have equal rights. Absolutely. But there's a time and a place. And I think that's the main thing that annoyed me with the protest. And I heard a metaphor, and I really like it. Imagine if an actor at his job, in the middle of him reciting his lines, he stops. He's Stella, I hate Trump, Stella. The director's gonna stop him and be like, whoa, what was that? And he'd be like, oh, it's my First Amendment rights. You got to leave that in the movie. And that was the reason that I'm annoyed with the players of the NFL, because when they're on that field, that's their job. Mm-hmm. So I agree with you in the time and the place. Now, as far as whether Kaepernick should be Nike's, that's up to them. But so we were kind of talking about this beforehand, and I looked it up.
There is a difference there, Cody. And I'm sorry for cutting you up, but I just want to point out one key difference there. Unlike that type of employment workforce, okay, there is a labor union here that controls that. These things are collectively bargained between the NFL and the players union. And so from a collective bargaining agreement, the NFL players have an absolute right to peacefully protest here. They're not breaking any violations, unlike in the NBA. Whereas if you protest in the NBA, that thing is collectively bargained there. So there is a key difference between the union negotiating these types of things. The NFL a few months ago tried to come out with their own policy saying, hey, listen, if you kneel or do any other protest when the anthem is being played, you're going to be fined this, and this. It took them about a week, because of the backlash was so aggressive from the players union, for them to come off that stance. Roger Goodell is messing this up. I put the entire blame on all of this at Roger Goodell's hands. If you would have had a Paul Tagliabue who was negotiating with the union back then, they would have had a deal done, right? Roger Goodell is so disrespected within the NFL community that he cannot control this. And I would fire Roger Goodell. I wouldn't fire Colin Kaepernick. I would fire Roger Goodell. Tim, what's your take on it?
Well, I don't like Roger Goodell, and I don't really. You know what I never understand is why so many people relate to leadership and ownership and the rich on issues like this instead of labor and the people who are actually more like where they are in their life and their station. I don't get that. Whenever an NFL player comes out and creates a problem, they're a whiner, they're a crybaby. Why'd you go to a different team? The fans go after the player and they constantly defend the ownership. I just do not understand that part of it. But that being said,
you don't support poor people supporting rich people?
It doesn't make sense to me.
It doesn't make sense.
Somebody
it really doesn't.
Explain that to me at some point.
Okay.
But that being said, from an investing standpoint, people lose money when they get too opinionated about what to buy and sell. Like if I actually went and shorted Comcast just because my Wi-Fi skipped, that's a huge red flag, right?
It's emotional.
If you're making investing decisions because of your politics and your emotions about a certain thing, and you're reacting to that and not really just thinking through it, and it's one thing to come out and say, I'm not going to invest in Nike because I don't believe in what
let's think about this from an investor perspective then. Okay.
Yeah.
It is so easy to rip on companies for sitting on the fence and never taking a stance, right? We do it all the time. We criticize politicians, we criticize personalities, we criticize actors, we criticize public figures, we criticize corporations for never taking a stance. Here's Nike, whether you agree or disagree, they are taking a very clear stance. Okay, a very clear stance. They are throwing their ammunition into the political arena. That is not something corporations typically do, especially somewhere like Nike when you got the famous Michael Jordan saying, hey, listen, Democrats buy shoes too, right? So you're seeing this massive shoe company, this massive apparel company, the number one in their industry, and they're taking a stance. And I support them for taking a stance. Now, the question becomes this: as an investor, they are obviously going to lose a certain demographic, right? They're going to lose a certain demographic. They're going to lose the Trump supporter. That's who they're going to lose. Okay. The Trump supporter.
Actually, Matt, I got to interrupt you there. Well, first, Michael Jordan's line was Republicans buy shoes too.
Excuse me. Yes, that's right. Yeah. Thank you.
And secondly, because I looked this up because I was in the prep when we were talking about this. A recent NBC Wall Street Journal poll found that majority of voters, all voters, 94% believe that Kaepernick's protest was inappropriate, in quotes is how they did it. So I don't think it's just the Trump supporters that.
Oh, Cody, I've seen many polls that a majority of Americans support the protest.
Well, no. So. They support the message. I don't think they support the time and place narrative.
Well, where'd you get that? The Wall Street Journal?
NBC News and the Wall Street Journal.
Okay. I've seen literally the complete opposite data. So I've seen it on both ends, and I get the point, Cody. My point is this: Nike is a very smart company run by very intelligent people, and I guarantee that they knew this ahead of time, that they were going to lose a certain populace. And I guarantee that their internal data says that this global brand, not a US brand, this massive global brand that has massive movements in China and Europe, I think they're going to offset some of that loss. I don't think this is going to hurt Nike long term in any.
I think it's smart marketing.
I think it's going to actually improve Nike long term.
Yeah, I think it's smart marketing. I like it. To me, the debate is not the political debate. We can have that. That's an interesting debate to have, and I have opinions on it. I don't believe that free speech and protected speech are limited to where you can say them. Now, I also believe that a workforce has a different environment, and being with a union, it's got very nuanced type of deal to it. There's no doubt about it. Watching this issue last year in the NFL, I found it incredible. And it does spark a lot of opinion, but that's not the important thing. No. A company's taken a stance, Matt. They don't hardly ever do that. It makes me scratch my head and think, why?
I like it.
Clearly thought through it. And the market doesn't hate it as much as you might think. If this
the market
doesn't hate it. It'd be down 5-7%.
Listen, the market took a negative. It's down 2.6%. The market took it as negative. However, it is responding intraday wise. I look at this as Nike looking 30 years from now. I don't think Nike cares about the political environment of the next 2 or the next 6 years. I think Nike's looking at this 30 years from now, and Nike has been one of those companies that always kind of push the envelope there. And I think that 30 years from now, they're looking at this and they're saying, hey, listen, this is a movement that will take hold and will shape kind of the conversation over the next 30 years, and it's going to be a bullish type of a movement. And they're just taking a stance. Nike is not a U.S. company, guys. That's not who they are. Nike is a world global company. That's what they're looking at. They're looking at 30 years from now. They're not looking at 30 years in the past. They don't care about the political protest of the current, because they're going to take a stance and they're going to come out on the other end shining.
Yeah, I mean, like or dislike Colin Kaepernick, I actually think this has less to do with him than you might think. It's going to be interesting. I'm going to tell you this right now.
Colin Kaepernick was not the only spokesperson for this. there was others as well. His name just got kind of thrown into the lump. It does make me a little curious about what Nike's been doing behind the scenes, though. Right. Because Nike's had Colin Kaepernick signed since 2011. He hasn't had a job in 2 years, and Nike's still been paying him a whole bunch of money. So is Nike kind of driving a little bit of this movement, outside of just Kaepernick? And that does have me a little concerned, little shadow type stuff there. But overall, I support people's right to protest. I would not kneel. That's not what I would do. Every time those planes fly over and you get the national anthem, I'm the type of guy that's going to get teared up just thinking about how great this country is. But at the same time, guys, I am a supporter of equal rights under the law. I am a believer that we're not there yet. I do believe that our society has made inroads and has had tremendous progress over the last 50 years, but we're not done. We have to continue to strive to improve in the future. And so, for someone who believes that people have a constitutional right to protest, and at the workplace, this is not the same, guys. If somebody at one of my companies stood up and did this type of protest, I would fire them. But they don't have a collectively bargained agreement where I can't. So because it is a different type of situation, they can handle that from a union and a league perspective. But until that's happened, he has every right to protest.
Complex issue. Obviously, last year it was
a divisive issue. But you know what? And Cody and I disagree with on this issue. But I respect Cody's opinion. I respect that his opinion is based on, and Cody, you and I both agree that people have the right to protest. We both agree with that.
Absolutely.
And we probably agree with 90% of each other. Would you agree?
Yeah.
It's just this, to me, and it might just be just my own perspective, obviously, but it just goes back to what I said last week. In America, we agree 90% of the time with one another. We disagree on nuances. We disagree on slight things, but we have most things in common. And the more we have these discussions, the better we get. And if people don't like us talking about politics, then they don't have to watch. And I'm fine with that too.
Is this politics?
Yeah, it is.
I thought
Absolutely,
we were talking about shoes marketing.
Well, everything's politics these days. And I'm so sick of this opinion that people can't talk about politics. That's why American consumers are the most ignorant consumers in the history of mankind, is because every time you talk about anything that they disagree with, they get offended. Well, knock it off.
I don't know. That's what participation trophies get you.
I think that's the entire story here for Tuesday's edition of the Halftime Report. Don't let your kids win, okay? And talk politics more. Let's do that.
Oh, there's a million stocks I want to talk about, but we can talk about them
Let's
tomorrow.
do rapid fire, Tim. Let's do rapid fire very quickly.
All right. There's a bunch. I mean,
just give me 4 or 5.
Okay. Freeport McMoran. Tackle 25 stock gold, taking it on the chin.
Yeah. We talked about this last week.
U.S. Steel.
Same thing. Responding off support, though, that's not a buying opportunity, though, T.
XRT and retail. We deep dove into this last week, and I loved this.
Good buying opportunity on this. Still a good buying opportunity. Love that one, Tim. Next.
AXP, American Express.
Potential breakout here of 107. Keep that on the list for this week like that as well. Go ahead.
The casinos are getting killed. And, I've been talking about this for weeks.
Casino for weeks now.
Wynn Casino, WYNN.
Oh, beautiful setup, Tim. Talked about this last week. Triggered on the downside, getting slaughtered, down 4%. Should continue. Love that one, Tim.
Yeah. Las Vegas Sands, both of them kind of were on the same deal.
We talked about this last week. If you're not already in this Las Vegas Sands trade, a breakdown of 64 would be significant.
General Motors.
Randomly short the U.S. automobile companies. Is that what you're saying?
They've been getting
Let's
killed.
just throw them all on. GM, Tesla, Ford, just throw them on. They're all garbage companies.
Google, who I've been positive on, has not been performing well.
They don't like you. Hey, remember when I said I don't like symmetrical triangle breakouts because you have overhead resistance? Do you remember that? I do. Look at that. Thank you.
All right.
I know you hate it.
Those
I told
social
you to get
media
out of this weeks ago.
Yeah, those social media companies are going to be up in front of Congress this week, by the way. We'll be talking about that later in the week.
Interesting. Yeah.
DocuSign, which is a company we had, on.
Yeah.
GOCU. They got earnings this week.
Earnings tomorrow.
95A.
95, yeah. After market tomorrow.
Quite a few. And AVGO Broadcom, who's on my watch list. They have earnings this week as well.
Nothing to see there, though. There's no trade
And
there.
Target, last one.
Breaking out a high base, Target.
I read a statistic on Twitter that fascinated me, and it's the most random thing, Matt, is that when a stock price hits 90 for the first time, it's going to 100.
Oh, wait a second, what?
So it's the stock's at $88
Yeah,
right now.
88.
So the psychology was this, and the guy, and then there was this long thread back and forth,
I can't make
trolls
too
and all
much,
this.
but
When a stock price hits 90 for the first time, almost every single time historically, it will hit 100.
I haven't researched that data, so I don't have an opinion one way or the other. I'm not going to rip on it because it's kind of the same analysis when I say I got a feeling. Okay, so I'm not going to rip on it that much because that's I got a feeling this thing just feels like 100, right? But there is some logic to it. $100 when you go from single digits to double digits to triple digits to 4 digits, those things are significant, and oftentimes they do have magnet-like qualities to them.
Well, and I will say this, and remember, guys, short-term price action is a reflection of mass psychology. That's what the market is. Mm-hmm. And so little things like this, Matt, like when we saw Apple break out at 188, 190, we're like, it's going to 200. We know it's going to do it. Had earnings, ran it, hit it, broke it, kept running. And when it wanted $1 trillion, we're like, it's going to get there. The market just wants it, right? Mm-hmm. And maybe that's a psychological thing. It goes back to reminiscences of a stock operator.
But why 90? The only question is why 90?
Random,
so couldn't I say the exact same thing when a stock hits 88? It typically has a tendency to go to 100.
You can't.
Because why can't you say that? Because that's why this is. The more I think about it, okay.
On the first trading day of September, if the stock breaks to a new high, it most likely will be at a new high by the end of the month.
Okay, hold on. Once the stock hits $9.50, it does have a tendency to hit $10 because prices do have a tendency to appreciate in a stock market that on average does appreciate 8% every single year. So I get what you're saying here. But you could say that on anything. But the logic is single digit to double digit to triple digit, those types of things. I would like to look at it, but overall, okay.
Yeah, tomorrow, Matt, let's go through a question I got from one of my students, one of our community members and a halftime crew member. I don't know if she's here today or not, asking about a stop loss on Chipotle. She has a bull put at 465, 460. Why don't we push that to tomorrow? We're already 10 minutes after today. And she's kind of curious.
Above 480.
Well, and here's the basic question is, where do you put a stop loss? My strike's at this and my support is at this. And I want to talk about it tomorrow.
That's a deep dive. We need at least 10, 15 minutes to discuss that. I think that'd be a great topic for tomorrow. Stop loss placement on a swing trade.
Yeah, for sure. All right, let's roll. We're done. Guys, thanks for being a part of our halftime crew. If you're here and you're watching, like, share, make sure that you're getting here every day. Matt, we have a very big event tomorrow for Tackle Trading, our bear market survival guide launch. Now, this event is a free webinar, but we are selling a premium product, and we are going to be promoting that tomorrow. Just kind of talk about that for just 1 minute, if you would.
Bear market survival guide is our premium system over there in Tackle Trading that you'll have an opportunity to become a team member of the bear market survival guide team, where you learn how to trade bearish conditions, protect retirement accounts, short the market, all those types of jazz. You can hit us up over there at tackletrain.com/BMSG. What would that be? Webinar sign up or you can just go to tackletrain.com and it'll pop
Oh,
up.
I just put the link in the chat.
Thank you for that. Oh, you can't read links anymore. The good old days, Tim, when you could just say tackletrain.com, right? No, you can just go to the tackletrain.com and it'll pop up. You can sign up for it. The link's in the chat. We're going to have a lot of fun tomorrow night. Tyler Craig, the author of the system, is going to be there. Noah Davidson, who is going to be the presenter, is going to be there. You and I will be there as well. And we're going to be there with a tremendous amount of our team members that we absolutely love over there at Tackle Trading, and some non-pro members I'm sure will be there as well, seeing everything that we do. And we're hoping to bring a lot of people into the bear market survival guide.
Yeah, I'm excited. I mean, guys,
it's an amazing system, Tim.
Guys, if you know us well and you are a member of our halftime crew and you come here every day, you know how much we do to build this community, and I love it. And the best thing about trading, though, Matt, is when you can impart specific bits of knowledge that actually impact the way people make decisions, you know. And these premium systems, they're different. They're different than just a live show. And I love everything we do, don't get me wrong. But in my opinion, these are the ways that we can actually change people.
The level of analysis is not the same, Tim. You know, when you get into our pro membership, when you get into our premium systems, you know, we come to the halftime show every single day to help our, students and our team members kind of evaluate the market, find opportunity, analyze certain things and whatnot. But in those systems, you get it specific into the actual system, what you're going to learn, how do you apply it and whatnot. And bang for your buck, Tim. I'm going to tell you right now, I've been around this industry for a very, very long time in so many different capacities. You will not get better value for what the cost to be a member of that bear market survivor guide is. You know, and the thing that we do everything is just to make sure that our community and our team members have the ability, the systems, the tools, the techniques, the support, the community that is needed to be successful long term. And that's what we strive for. And that's what we strive to do. And I think we do a fairly good job at it.
I agree. All right, guys, we'll see you tomorrow. We'll see you over at Tackle Trading. We'll see you in our pro and premium.
And we will see the halftime crew tomorrow, same time, same channel. Thanks, guys. Like and share as always. Tell somebody about it. You guys are the best. We'll see you tomorrow.